bought my first mobile home park, bought another one, and then learned about self-storage. And these two asset classes, they're considered recession resistant because they work well, they perform well in up and down times. So I wanted to get a little bit diversified. I started buying self-storage facilities as well. And that leads us to today.
Welcome to Investing for Generational Wealth. I'm John Lai from Clive Capital, where we help high earners just like you invest outside the stock market to passively achieve long-term wealth generation through superior risk-adjusted returns, long-term passive income, and cash flow and tax benefits. And together, we're renovating over 900 apartments and building over 500 single-family rental homes. Before we begin, a quick disclaimer, just like all times, we are not financial advisors. All investments are subject to risk, including the possible loss of money that you invest. So perform your due diligence before making any financial decisions. And of course, consult your CPA, your attorney, and anyone else before making any investments. And I'm your host today, John Lai. Welcome to today's episode, Investing in Self-Storage and Mobile Home Parks and RV Parks. And today's guest is Gabe Peterson. Gabe is the founder of Kaizen Properties, I love that name, and hosts the Real Estate Investing Club podcast. And Gabe's journey, his career started in corporate consulting, eventually moving over to real estate. He has a thriving real estate business focused on self-storage, mobile home parks, RV parks, and the like. And Gabe, I gave a quick overview of your background. Do you want to talk a little bit about your experiences and how you got to where you are today?
Yeah, for sure. Thanks for having me on, and thanks for the intro. So I have a podcast, the Real Estate Investing Club, and I ask, everybody that comes on my podcast, I always ask them, how'd you get started in real estate? And I like asking that question because I feel like everybody has a completely different response. We all come from different areas, different backgrounds. As you mentioned, I was in corporate, and when I got into corporate, it was like 2011 or something like that. I knew from the moment I started going to work that I just didn't want to be in corporate. I wanted something else. I wanted to start my own thing, but I didn't have anybody in my life that was an entrepreneur that could kind of show me the ropes. And so I just tried pretty much everything I did. And this is going to go back to real estate. I promise. I'm just going through the whole
No,
story.
take the
Uh,
journey.
but yeah, I tried everything you can think of. I tried, back in 2011, they, had all those ads that was like, start an e-commerce store, start a digital marketing company. And I tried them all.
Right.
I grew an e-commerce store. I think we had $30,000 a month that we were doing, gross, not net. But I just didn't like anything that I was doing until I did my first flip in Tacoma, where I live. That was in 2014, and it was a triplex. We bought it. I think we bought it for 185 or something like that, and we ended up selling it for 350. So we made a pretty good spread on that, and it was the biggest single check that I'd ever seen in my life. And so
Right.
the light bulb kind of clicked, and I was like, okay, there's something to this. This makes sense. But again, I didn't really have anybody in my life at that point to say that you can do, you can leave the security net of corporate America and do your own thing. And so I kept doing real estate on the side from 2014 to 2019. So I did a flip here, I did wholesales, but not like fully going all in. I still went to work, and I was just kind of had one foot in both camps, which whenever I talk to people, I say it's the worst way to go. If you want to continue if you want to do real estate and have a job, get a job in the real estate sphere, like as a mortgage, as a broker, whatever you want. Just get some kind of job in real estate. Don't
Right.
have your feet, splitting it. But yeah, then I finally in 2019, I just decided now's the time. I can't be doing this anymore, and I decided to go full time into real estate, and that's when I was switched from single family to commercial. And originally I was going to do multifamily, which is what everybody starts with, understandably, because we all buy, single family rentals, and it just makes sense to buy something bigger. And so I was going to go
Right.
down the multifamily route, but I met a partner who had taken, I forget the course. I think it was like Kevin Bupp's course or something, one
Right.
of the mobile home park courses. and he kind of walked me through why you would want to invest in a mobile home park. And we can get into those reasons later, but it made a lot of sense to me. And so in 2019, I bought my first mobile home park. I mean, the rest, you could always say the rest is history, but bought my first mobile home park, bought another one, and then learned about self storage. And these two asset classes, they're considered recession resistant because they work well, they perform well in up and down times. So I wanted to get a little bit diversified. I started buying self storage facilities as well. And that leads us to today. We own in Arkansas, Indiana, Texas, and Washington. And self storage, mobile home RV is what we buy. Just closed on one 2 weeks ago, or 2 months ago in San Antonio. So this is our first time in San Antonio. We really want to build a bigger footprint in that market. We're in Dallas Fort Worth and Lubbock, Texas. Texas is great for parks. By the way, if you guys are interested in mobile home RV, there's tons of them. They perform pretty well if you buy them right. But so yeah, now we're in self storage mobile home is what we do, and that's kind of the story in a nutshell.
Got it. That's great. That's wonderful. And when I first learned about commercial real estate, I mean, obviously there were apartments, but beyond that, it was through Joe Fairless and his mobile home
Yeah,
park
yeah,
stories. And so those are great stories. And kind of his podcast kind of launched my interest in commercial as well. Like what got you into mobile home parks and then eventually self-storage?
yeah. For mobile home, it was that partner. He, as I mentioned, he took. I think it was Kevin Bupp.
Hmm.
If Kevin Bupp doesn't have a course, then I'm totally talking out of my ass. But I'm pretty sure he took his course,
Yeah.
and he taught me about why someone would want to invest in mobile home parks. And I
Hmm.
mean, it's pretty obvious when you think about it. Mobile home parks, most people think about when in commercial, they're thinking about multifamily. But when you own a multifamily asset, then you have all these things that you need to maintain. You need to maintain
Right.
the plumbing, the electrical, the actual structure, and so a lot of things can go wrong. Mobile home parks, it's literally the underground utilities that's your biggest concern. Outside of that, the people own their own homes, and so you don't need to
Yep.
worry about sinks breaking or anything like that. So they are, I would say, they're easier to manage than multifamily, and they are, well, yeah, they're easier to manage, and they're also sticky. People who rent apartment units, they can move out relatively easily. When people own a mobile home, they actually own that home and it's in the park. And to move a mobile home takes quite a bit of effort, and so they're a little bit stickier than multifamily, which you actually wouldn't think they would be, but they are. And so people stay there a little bit longer.
Yeah.
We also own long-term stay RV parks, which are similar to mobile home parks in that the people come there in something that is mobile and they live there, but long-term stay RV, they are much less sticky because you can just hook them up to a truck and drag them out. So the turnover
Yeah.
rate in long-term stay RV is much higher, but you tend to get a little bit more cash flow with long-term stay RV. But yeah, that's the gist of that.
Got it. Okay. And was there, I guess, was there a high learning curve for you to get into mobile home parks? And because there's the underwriting, right, of well, during the valuation stage and the acquisition stage, but then there is eventually operations. Do you have like a team on site to help you operate? And do you have a team that helps you through the acquisition stage?
We did the underwriting and the acquisitions on our own. And so we do, off market outreach. Now I'm actually leaning more towards brokers. For some reason, I had it in my mind for the longest time that you can't find good deals through brokers. That's not the
Yeah,
case. You can find good deals
yeah.
through brokers. But for most of what I own, I got off market through doing mailers and all that kind of stuff.
Yeah.
But yeah, to go back to your original question, yes, learning curve was pretty steep, as it is with everything, especially when I was going from flipping houses, which is not the same thing as owning an asset that is, that is running as a business.
Right.
And so it was a big learning curve, obviously, but it's to be expected. Whenever you start something new, you're going to have to learn a few things. So the learning curve was high. I think the hardest part was actually finding good management, because for multifamily, and I'm just using that as an example because a lot of people do it. You do it, and it's just what people think of when they think of commercial real estate. Multifamily, there are third party property managers out there that you can go to who can manage your asset for you, and it's
Right.
it's like a standardized product out there. There are people that you can go to, not standardized, but they exist out there. You can find them. That does not work. It doesn't exist for mobile home parks. In fact, we
Hmm.
went to a few third party property managers um, who had multifamily in the area, and we brought our parks to them, and they were like, no, we're not going to do that. And so the hardest part was really getting good management, and we have management that is in the area. Originally we went through a few managers, and that was we even got to the point where we were about to sell the parks, because we had such bad management. We had such a
Hmm.
just a hard time getting in a groove to where delinquencies were low, the turnover wasn't so high, and so we were about to sell, but then we found a good property manager, and so that really is the crux of it. If you can find good boots on the ground, good a property manager to work with, it's night and day. It makes it just either a nightmare for you or something that you can definitely manage and creates good cash flow for you.
That's great. That's great. Did you start as a GP in the syndication, or did you go in as an LP initially and then learn the ropes? I know you had a partner, so you probably did the former.
Yeah, I wish I had vested as a limited partner. I didn't know that was a thing when I first got into real estate. I didn't realize that you could invest in other people's deals. But if I were to go back to my younger self, I would tell that version of me, um, well, to invest as a limited partner, to invest in somebody else's deal, because that really gives you the opportunity to see how a deal is run, especially if it's an established team that knows what they're doing. You can learn a lot just from investing in somebody else's deal. And I wish I had done that, but no, I did not. To answer your question, I just went straight in as a GP. In fact, it was three partners that the first park that I bought. None of us had experience in mobile home parks. It was complete learning curve for all three of us. We had all done things in real estate, but none of us had, managed mobile home parks. We made it, but those assets are performing great. They like, yeah, we bought them at the right price. We did the right things. It turned out very well. But if I did it again, I would definitely start earlier, and I would learn more by investing in other people's deals. I feel like there's a lot
Yeah.
that can be learned just by watching somebody do it.
So the audience that we have is primarily like software engineers or other tech professionals, in sales and marketing, whatever it might be. Very analytical, but also they may not be, and most likely will not have that much experience with commercial, let alone mobile home parks. And
Yeah.
what would you say to them from an investor perspective or prospective investor perspective? Why mobile home parks? What get to self-storage later, but why mobile home parks? You touched upon some of those. And then what would you do as an LP? What would you do as a prospective investor? Like invest as an LP. How would you then select that syndicator,
Yeah.
assuming that they're going through a syndication?
Right. Um, yeah, I've already touched on why mobile home parks. They're sticky. They're good in up and down cycles, and they're easier. I won't say easy, but they're easier to manage than
Right.
other assets if you get good property managers. That's the gist of why mobile home, and they produce pretty good cash flow. Cap rates are higher, a little bit higher. They've been going down, but they're higher than what you see for multifamily. Um, and then the second question was, how would I invest as a limited partner? How would I do the
Right.
analysis?
Right.
Yeah, so that one really comes down. I mean, you hear it so often when people talk about investing in syndications. You choose the jockey before the horse. So it really comes down in identifying a good person that you can trust, that has a track record of success. They've done it before. They know what they're doing. And then invest in the asset you're interested in. If you like mobile home parks, RV parks, invest with somebody who does that. Um, you know, and try to understand how the underwriting works. You don't have to know it as well as the GP. Obviously, you're not going to. That's their job. But maybe take a course or learn from somebody that has experience investing in that asset, so you can do your own due diligence, your own underwriting of the asset. Because I've noticed, I see that sometimes people can just throw out words to make it seem smart, but if you dig
Mm-hmm.
deeper, they don't really know what they're talking about.
Yeah.
And so, if you can get your own underwriting skills, understand how mobile home parks work, and then find somebody that you trust and like, that's the best way to do it. I would also say invest in within a larger metro, not in the metro, because those are usually not great deals unless you find something off market. But within an hour's drive to a larger metro, 100,000 plus. That doesn't guarantee success, but it does uh, make it more likely. And
Right.
one requirement that we almost always have is that the metro has to be growing. If it has a negative net migration, then just don't do it. Just think of something else.
Um, are there other KPIs that you look at as a GP when you're looking at underwriting deals? And how translatable are those to an LP? And is it unique to mobile home parks? Like if I'm looking at multifamily, I'm looking at specific, metrics, but is there anything unique to evaluating underwriting a mobile home park?
Unique to mobile home
I
parks.
mean, it
I
doesn't,
mean, it's all NOI, just like
yeah.
multifamily.
Hmm.
I don't know. I can't think of any. So when you look at deals from brokers, they love looking at the cost per pad. Do not use that metric. That is a horrible metric to use. It means nothing. It just they always like to say, the pad it's under $20,000 per pad. It's a great deal. Don't use that metric when underwriting deals. But outside of that, I mean, it really is just the NOI. Just make sure the NOI makes sense and how they got there. And you're talking about the utilities. We actually just underwrote a deal where they had utilities and it was just said utilities. And we originally thought that was water, sewer, garbage, all the utilities that they paid for.
Hmm.
But it turns out that the only utility that was included in there was electricity, and all the other ones, they hadn't even been accounted for, and it was not on the books, even though there was a bill for them. And
Wow.
so just make sure you understand, just the general P&L, how it runs. In terms of specific KPIs, I can't think of something that is unique to mobile home parks.
Or maybe not unique, but like your buy box. Like what does your buy box look like?
Yeah. So okay. So that can be. There's a lot of different things. I mentioned the metro needs to be growing. It's a big
Hmm.
one. Um, it's a very simple rule of thumb, but we love when there's a Walmart within a 10-mile
Hmm.
radius of the
That's
mobile home
great.
park.
Yeah.
And that's just because I mean, Walmart does their research. They know where population is. They know where population's going. And so it's just a rule of thumb, and it's not specific. But outside of that, uh, if we have a park in the area, we really don't care how many pads it is. So if we have a park that's within 30-minute drive of a new park that we're looking to buy, it really doesn't matter how many pads are in the park, because we can use the same property manager and kind of get economies of scale there. But if
Got
you're
it.
getting into a new area, it really, I mean, you need to have 75 to 100 sites to really have an on-site property manager make sense financially. Otherwise, you're going to have somebody that's off-site, and that's when things can get kind of difficult. Or it can work. You can definitely make it work, but it's not as reliable.
Right. Right. That's good. Okay.
Outside of the buy box for that, I mean, we like specifically us. We like Texas. We're looking at Texas a lot. But there's mobile home parks everywhere, and they're good no matter if you find a good metro, it's growing, and it if you're new to the market and you're buying a larger mobile home park and it makes sense, then yeah, there is a lot of infill deals out there, and those ones are. We actually just bought an infill deal, the one I mentioned in San Antonio. Um, they're more difficult, and it's if you're investing in somebody else's deal and there's a huge infill component, that I would make sure that they know how to do that. And infill just means that you buy a park. Let's say there's 100 sites, there's 100 pads on the park, but there's only 25 that are currently occupied. So cap rate might look like 3% or something really low because
Mm.
they're selling it with the expectation of doing infill, bringing homes into the park and getting them filled. So that's a lot more difficult, and a lot more things can go wrong there. And so I would, it's just something to be wary of if you are investing in somebody else's deal. Um, I was going off on a tangent there. Did that
No,
answer your
that's good.
question?
Okay. Yeah, we were talking about buy box, and
Yeah.
what I was also thinking about was in traditional multifamily, you can buy different classes.
Oh, yeah.
There's also value add. That's also a pretty huge component unless you're buying fairly new.
Yeah.
What does value add look like in terms of mobile home parks?
Yeah, and there are also classes in mobile home parks, and you can get
Mhm.
55 plus communities. There's specific niches in mobile home. I don't really look at the niches; I just look for general. And value add for mobile home, infill is a huge one, like I just mentioned.
Okay. Yep.
Another one is well, just the standard ones. If their expenses don't make sense and they're running up too big of a bill in some area, it could be a whole bunch of different areas, but if their expenses are too high and you can cut expenses, that's one way. The other way is if their rents are too low, if they're under market with their rents, that's pretty common, especially with the older ownership. Somebody who's owned this park for 20 years, 30 years, and they just very slowly raise the rents. We just bought the park that I mentioned. I'm just going to use this park all the time in my examples because it's fresh. But the one in San Antonio that we just bought, the pad rent was 300, and which is really low. And so that's the cap rate that we bought it at was pretty low, but we understand that there's a lot of room in the rent. And so rent growth or being able to increase the rents is an obvious one. Infill for the art, if it's in long-term stay RV, you can, it's a little bit more difficult to predict income, which is why you really do want a 3 year P&L from them,
Right.
because even long-term stay RVs, they will have nightlies and weeklies, and that can kind of throw off the gross income. But the other value adds you do for those parks is having Wi-Fi available for the tenants.
Yep.
Laundry units is something that a lot of people put in there. We don't do that. And then also on-site convenience stores. A lot of people do
Oh,
do
okay.
add that.
Yep.
When we buy them, we shut that down. We don't want that as a part of our parks, just because it's another layer of management that we don't really want. And that if you buy it in the right area at the right price, the park will do well without
Got
uh,
it.
that aspect. Yeah.
Yeah. Yeah. Well, we had a vending machine, um, basically a real estate magnet on a webinar once, and not necessarily real, vending machines for RV parks, but it seems like it would be, a prime kind of area to actually put in something like that because from a convenience perspective, you want to, up the convenience.
Mm-hmm.
It's almost like a captive audience. If they're already there and they want something convenient, they can, go ahead and go to this either store or some other utility like that.
Yeah, yeah, it's for sure an option, and a lot of people do it. We have looked at the vending machine option for our own parks, and we chose not to do it because I guess there's two ways to do vending machines for RV parks. One way is you own the vending machine yourself, you stock it, you get the money out. The other
Right,
way is you
right.
just essentially rent it to a vending machine company.
Yeah.
The renting option is more attractive, but you got to find a company in the area that you're working with that you can trust. I
Hmm.
would never recommend an RV park owner do it
Right,
them
right.
like buy a machine, put it in their park, stock it, take the money out. It's just a lot of the time people are paying with cash, and I hate dealing with cash in any of my businesses. I don't want my employees to deal with cash. I want it to be online. I want it to be digital. We do accept cash for payment for rent, but we do it through Pay Near Me, and so the tenant will
Got it.
take their payment to Walmart, to 7-Eleven. They have a slip that has a barcode. They scan it at Walmart, and then they give their cash to the attendee. It goes right to our our platform, Appfolio or Buildium, depending on what we're working at. And so there's still no cash transactions done. And so I'm really against cash transactions in mobile home parks, RV parks, but it's definitely doable if you want to do a convenience store. It's something that can be done.
Yeah, that makes sense. You talk about some of those innovations. Are there other innovations that, if people who don't know about mobile home parks, like not very familiar with them, um, if I look at and I envision a mobile home park, I'm thinking about the mobile home parks from, 20, 30 years ago versus now, there's a lot of innovations to be had. What have you put in place? Like what innovations have you put in place? Very much like the, cashless systems.
Innovations.
Things that maybe like
Yeah,
help
so
your
there's a lot
lives.
of like, yeah, bill back kind of there's you can do bill back for utilities. So you just basically just screw it onto the actual utility and it allows you to recapture that
Right.
cost. There is Pay Near Me I just mentioned it. It's a great one. Pay Near Me goes through Buildium and Appfolio. Those are the two platforms that we use. And it's really awesome because a lot of tenants, even if you don't like using cash, a lot of tenants do like using cash. And so this allows you to have a cash transaction almost digitally because they're, as I
Okay.
mentioned, they take their slip, they take it to Walmart, they take it to 7-Eleven. I think there's like 7 or 9 different companies that partner with Pay Near Me, and they can pay with cash. But they don't, your employees don't have to deal with the cash. So
That's great.
Pay Near Me is a good one. Obviously your CRM system, Buildium, Appfolio, all that stuff. Another innovation for mobile home parks. What is it? I'm
Well,
just
I mean,
trying to
I
think.
would imagine like if you put in laundry, like, laundry that also uses the same mechanism, right? Like cashless mechanism, I think that would be
Mhm.
useful, right?
Yeah. Yeah. We did have a laundry unit at our park, but we ended up taking them out because people just destroyed them, and
Yeah, yes.
we uh, we kept fixing them, and even the bathrooms. Like we had public restrooms at one of our parks, and but we ended up just shutting it down because people would just destroy them,
Yeah,
and
yeah.
yeah, that's kind of an aside, but yeah, other innovations. I can't really think of other things that for mobile home parks that we're doing. I mean, your online, it's not really an innovation. It's just using digital marketing to fill your park. It's not an innovation, but it does work, and it's not something that a lot of people do. And really on the self storage side too, if you that is another like value add. I wouldn't really call it a value add, but it is something you can do that a lot of owners are currently not doing. And so if they are experiencing vacancies, and like one self storage facility I bought in Texas in Dallas Fort Worth. Um, this facility wasn't even on Google. Like you could not, if you search self storage, it would not pop up. You had to like zoom in and find it. And so like just getting a Google business listing, putting your phone number on it, getting a website,
It's
those
great.
they're not innovations, but it is a value add that a lot of parks and self storage facilities um, they can, that could be something that you can do to increase occupancy.
Yeah. Self-storage. Let's shift to that a little bit. Now, why the shift? Is it just because of diversification or do they dovetail well? Like you have mobile home park and then you have a self-storage that's close by and they work hand in hand.
Yeah, I want to say it was some grand strategic decision, but it was more shiny object syndrome.
Yeah, yeah.
I at the time, this was 2021, I think. I bought some mobile home parks, and I was going to a bunch of conferences. I started my podcast talking to all these people, and I just learned about self storage. And I was doing a lot of marketing, and I said, "Why not self storage?" So I started marketing for self storage facilities. I bought like 3 of them within a couple months, and I really liked it. They are easy to manage. There are more things that can go wrong in terms of location, I would say, and I've
Oh,
definitely learned my lessons
okay.
there with self storage. They
Could you
attract,
could you expand on that a little bit more? The location
yeah.
aspect?
So when I was first buying facilities, I was honing in on markets that had positive growth, just like we mentioned,
Right.
and that did not have a high net rentable square feet per capita. and so there was demand in the market. Those were the things that I was looking for. And so I bought this facility. I'm going to use one example down in Hot Springs, Arkansas. Um, and all the KPI checked off. Like, it was growing market. There was low net rentable square feet, and the price was great. And so I jumped into it, and I flipped the property, got it up to started running it, and then we just started getting hammered with people breaking into the property.
Mm.
And it's something that I didn't realize getting into self storage, is that break-ins is a massive issue if you're in the wrong location.
Okay.
And so if you don't have good security and you're in the wrong location and you're not manned, it's just going to be a nightmare. And so that's the other thing. The positive for self storage is that it really can be run unmanned. You don't need somebody there,
Right.
and so you can buy something in the middle of nowhere and run it, and to variable degrees of success. Downside, going back to this hot spring one, if you buy it in an area that is prone to property crime, then or homelessness, you're going to have a massive problem. And
Yeah.
I had that problem with that property. I did, luckily, I still made money on it, but not nearly what I was going to be making on it. That example specifically, like, I had done all the work, I flipped it, I got it in a good condition, I rented it to about 50%. We'd been battling break-ins, and so I was at the point where I was like, all right, I just think I'm done with this. Somebody local needs to buy this. And so I went to sell it, put it on market. And the weekend before closing, so I think we were supposed to close on like a Wednesday. And so that weekend, right before it, some group of thieves came in there, literally destroyed every single door in the
Oh
property. They
no.
had those like jacksaw hammers, and they
Yeah.
just cut into the units, and then they would cut through the walls to get to the back units.
Oh
And
geez.
it just completely destroyed the property. And I had the seller backed out, obviously, or the buyer backed out. So that the story there, and the caveat for self storage, is when you're buying it, if it's small, well, first of all, don't buy small self storage facilities. It's not worth it. But if for some reason you do want to buy a self storage facility and it can't be manned, and it doesn't have a security system, you just better be hoping that well, I guess you could do your research. You could call the police, ask, how many times do they get calls for this facility? Look at demographic data. What are the property crime metrics for that area?
Right.
And I even had a second example of this. I bought a self storage facility downtown Lubbock, like downtown,
Mm.
great population, everything, and it's right next to the University of Texas Tech. So it a great location. But that one, again, we're having problems with homeless people coming in there and sleeping and getting in the units, which kind of dissuades customers from wanting to rent
Right.
from you, because it's downtown. And so the facilities that I'm having the best luck with are kind of on the outskirts of a larger city,
Mm.
and that is, I mean, I'm not saying like that's a hard and fast rule, but it's from my experience. Kind of the suburban facilities have had
Mm-hmm.
the best luck. If
Yeah.
it's a downtown location and you're in a location that is prone to property crime, it can be difficult. But as I said, on the positive side for self storage, they great cash flow, very easy to manage, and they can be run remotely pretty well. Like, you don't need boots on the ground is really the only person that you need, and it's pretty easy to find that type of person because you can just pay them an hourly wage. You can even hire a handyman to be your boots on the ground, and it's not that expensive. So yeah, pluses and minuses.
Do you find that in the last, like when I started following both mobile home parks and self-storage, this is about the same time you got started, maybe a little bit earlier. Um, there's a lot of interest in it.
Yeah.
But just like any other asset class, multifamily being one of them, in the last couple of years, it was hammered by interest rates. And then that asset class kind of either were over, I guess there's a whole lot of competition that came into the market, right?
Mhm.
Do you find that with mobile home parks and self-storage at all? I know with self-storage, it was heavily built up at some point. and
Yeah.
then it's kind of leveled off at this point now. But do you find that with RV parks, mobile home parks, and or self-storage?
Um, yes. I mean, there is a lot more competition now than there was. For self storage, especially because we look a lot in Texas, a lot of the cities in Texas, the metros are overbuilt. Net rentable is pretty high, and so yeah, there is a lot of competition, and also you got to be careful about where you invest because there might be just too many units in that area and not enough
Yeah,
population. Um, RV parks, and especially in Texas, are also, I would say, overbuilt because there's just so many of them in Texas. That they do work pretty well generally, but yeah, those are also overbuilt. But competition wise, yeah, it's pretty competitive for all three asset classes. There are fewer buyers than there are multifamily. So I don't buy multifamily, but I would assume it's a little bit less competitive than multifamily.
yep.
But yeah, it's still pretty competitive.
How do you protect yourself against that? Like as an LP investor, looking at investing in any of those asset classes, and with a syndicator, how do you what do you look at as an investor, and then as a operator, like how do you protect yourself against that? It's kind of hard to protect, more so with self-storage because you could have a vendor come in and build a self-storage, not like right away, but
Oh
like
yeah,
very pretty quickly, right?
yeah.
Versus a multifamily. But RV parks is a little bit more difficult because you have to, get entitlements, get the city to sign off on it, and so it's a little bit harder for RV parks and mobile home parks. But going back to how do you protect yourself as an operator
I mean, how do you protect yourself
from competition? Like
from
I mean,
yeah,
I
you
guess
mean from
like
more facilities coming online, that kind of thing?
right.
I mean, I don't have a good answer for you. If
Yeah, there's not a way to protect yourself, except for maybe
it's
to
not in
look
your
at,
control. You
yeah,
can look at you can see if there's been permits pulled for that, or if there's been facilities that are planned. But for long term, I don't really feel like there is a way you can protect yourself because anybody can build a self storage facility if they want to, and so
yeah,
uh, I guess. Well, I like to think that people, especially with money, are generally rational, and so if you own a facility in an area that it's already um, the net rentable is not super high, then and it doesn't really make sense to build. I don't think people will build.
right.
Obviously, people can, and sometimes they do, but yeah, that's one of those are one of those things that if it makes sense when I'm buying it, I don't predict too far into the future how much inventory is going to come online unless it's already planned.
Yeah,
Um, yeah,
yep.
there is a good software that I used to use. I haven't used it recently, but shoot, track IQ TRA. I think it's called Track IQ.
Hmm.
Um,
Okay.
TRAQ IQ, and that they have really good data on new builds for self storage. And then RV Park IQ, everybody uses IQ, I guess. RV Park IQ is RV Park. Yeah, that's right. RV Park IQ is another really good data source for RV parks. And you don't have the subscription's pretty expensive, but you can buy a metro, and so you can. I think it's like you can buy like 100-mile radius or something, and they'll give you all the data on parks in that radius. And so if you're looking at investing in San Antonio, you just buy one of their reports. I think it's like $80 or something like that, and it'll give you the data for that area. So if you are interested in mobile or RV parks or self storage, I think it's Track IQ is for self storage, and then RV Park IQ is for RV parks. I do not know of one for mobile home parks, but mobile home parks do kind of correlate with multifamily, and so you can kind of use the same data as the multifamily users or multifamily industry uses. It's not exactly the same, but it correlates well.
For those that are in the attendee list, listening to this webinar live, I encourage you to put in your questions in the Q&A, and then we can answer them as they come up. Uh, I did have a question about comps. Like, how do you use the Invest IQ to comp your both mobile home parks as well as your self-storage?
No, and that is the most frustrating thing. I wish there was like a Zillow. I mean, there's Crexy, there are
Right,
sources out there that you can use, but there just is not a good way to comp properties outside of calling brokers and asking them to, pull data for you.
right.
And that it frustrates me like no other. I wish there was. I need to get a subscription to shit, I forgot the name, but there is no. At least I don't know of a really good way
Yeah,
to
yeah.
comp properties.
Like I don't know. I haven't looked into it, but I don't know that like Yardly or anything like that will comp mobile home parks or
Yeah,
self-storage. So that's yeah,
frustrating.
that's frustrating. That's
But
unfortunate.
yeah.
Um, Diversification. So you went from mobile home parks, RV parks, now self-storage. Uh, do you look to diversify outside of those? I mean, there's a pattern with those, right? I mean, they're lighter weight than multifamily, right? And that's a benefit. And it's probably I wanna hazard to guess it's probably less expensive to buy like a mobile home park and or like self-storage than an apartment, like a large apartment, right?
Yeah,
But
100%.
have you thought about diversifying outside of those two asset classes?
I have. Every time I think about diversifying or buying other assets, I always tell myself to just pump the brakes because it's that shiny object syndrome. It always seems.
Right.
It, I just feel like I should just continue to focus on what I'm good at, and I understand these asset classes. I'm I understand them well, and I work them well, and so I
Yep.
want to continue down this path. But I've looked at like industrial. I've looked at
Yep.
multifamily. I've almost bought a multifamily before just because it popped up, and I thought it was a good deal. And so, yes, I have looked at other asset classes, but I really do want to focus in on what I'm doing, because I don't feel like I mean there are benefits to diversifying, but every time you switch to a new asset, you have to learn it.
Yep.
And they are all real estate, but they do have their own kind of cadence. And so it is something that you have to learn, and when you're learning, you definitely make mistakes. And so I
Yeah.
uh, um, I kind of want to focus in on what we're doing right now.
Yeah, and you've built this expertise, and obviously you want to leverage that expertise as far as you can. Is there like a limit where you can say, I have acquired 20 different mobile home parks across the country, and it's the most I can manage, or do you think there's really no limit like that?
Um, yeah, I guess I don't really want a huge team. So if I had to get like multiple regional managers under me, I would not want to do that.
Yeah,
And so I do want to hold long term, but if it really does start to grow, I think I would be more interested in the exit. And so 3 to 5 year exit. Um, it'll depend on the asset, but I don't know if I really want a huge team.
yeah.
Yeah.
And I should have asked you early on, like, do you buy and do you have a term that you hold? Is it like 5 years, 7 years, 10 years, 15 years? Have you gone full cycle on any of the assets yet?
Well, yeah, like I mentioned, we like the first mobile home park. I was doing
Yeah.
flips, but the first one I bought, I closed. It was like December of 2019, so almost 2020. And
Right.
so it's been 4 years that I've been doing this. So I have gone full cycle on a couple, on two of them, and then but the other ones I have them. We've almost sold a couple times because we got great offers, but um, we decided not to. Like the mobile home parks here in Washington State, in Eastern Washington. They are, they're doing really well, and we could sell them for a great profit. But uh, I mean, we probably should, but we just
But
don't
and
want to at this point.
I mean, yeah, they're probably a great cash flow investments, right? And so like,
Yeah,
well, they're cash flowing and
yeah,
you could
they're
probably
making
get something for
money.
them.
Yeah,
Yeah.
yeah, yeah.
Um,
There's
do,
yeah pluses and minuses.
Do either you have a goal or I didn't ask about the capital raising process. Like, do you have equity? I mean, I'm assuming you have debt, but do you have equity that you bring in, and what does that look like? Do you have a fund?
Don't have a fund. I've worked with individual investors in the past, and on the debt side, I usually do seller financing, and
Mm,
so I negotiate with the owner. I feel like that would be a lot more difficult in multifamily, but on
yeah.
self storage, mobile home RV, it's a lot of mom and pop owners, people that are willing to negotiate with you, and a lot of them want, especially in environment right now where interest rates are like 900%, and it just doesn't make sense at the number that they want. You can negotiate seller financing pretty easily because you just show them the numbers. You're like, hey, you want this price, but this is a 5 cap price, and
Right.
interest rates are 7%. I
Yeah.
can't do this. So you
Yeah.
can negotiate seller financing. So on the debt side, usually it's seller financing. I've only done one deal with traditional financing. On that deal, I will say it is difficult to get debt for all of, all of those assets: mobile home parks, RV
Wow. Okay.
parks, self storage facilities. Uh,
Okay.
a lot of banks don't like them. It's difficult to get debt, and so which is another reason that you can tell the sellers why they should consider seller financing, because it makes the transaction a lot easier. And just sometimes banks, well, most banks don't want that on their books. Um, on the equity side, as I mentioned, yeah, I work with a lot of individual investors to come in. The purchase price that I'm looking at is usually below the $2 million mark, and so it's not, you know, I don't need to raise $1 million to close on these deals. And so yeah, usually it's individual investors or my own money, and then the debt side is seller financing. We have done traditional financing. Don't I did not like to do that. And I really don't want to do it again in the future, but it seller financing is what I feel like I'm pretty good at negotiating it, and it's something that I like to give to the seller.
It's pretty amazing. I mean, that's I mean, apart from like smaller asset classes, it, it's pretty amazing that you're able to even engage sellers and have them have seller financing. Like in multifamily, that's very, very rare, right? Because there's such large properties, you need to engage banks or some
Yeah,
other type of debt lender to
yeah.
be able to buy and yeah, buy down
Well,
a
and
property.
in multifamily, usually there's existing debt. I mean, they
Right.
have debt on the books still. For a lot of these self storage mobile home parks, these people have owned them for 30 years. They've owned them for
Yeah.
forever, and so there is no debt, which
Right.
makes the seller financing conversation. That's why it's easy, or at least there's minimal debt, to where it could be bought down pretty easily.
Yeah.
Um, but yeah, so it's yeah, multifamily would make sense that you're not able to do that, but there is still a lot of opportunity out there for seller financing in self storage mobile home parks.
Okay. Cool. Anything that investors should keep in mind when they're thinking about, I mean, we kind of talked about like what they should be looking at in terms of sponsors or like people who are people who are syndicating. But is there anything that people should keep in mind if they're looking at either getting into mobile home park themselves as maybe a GP or like investing with a GP or like self-storage for that matter?
Yeah. Um, Not that I haven't mentioned already, like self
Okay.
storage, the things that I've mentioned. Be wary if it's a small self storage facility, under, I would say don't do anything under 30,000 net rentable.
Hmm.
But I own a facility that's like 10,000. And so um, the small ones do work fine. And
Yep.
in fact, I have a third party property manager for self storage, and they own tons of self storage, and most of them are sub 10,000, and they do totally fine. They're remotely managed and all that. Um, I'm sorry, I completely forgot where I was going with that
Yeah, yeah,
conversation.
no worries.
Oh yeah, you're asking me what should people look out for when
What should people
investing?
look out for? That's right.
Yeah. Yeah, so outside of what I've mentioned, for self storage, the location, small facilities, watch out for the location. For mobile home parks, um, just really dig into their P&L. Make sure you understand the expenses. Make sure you understand what the market rents are for rent, what they can support. Um, yeah, I mean, there's a lot of details that go into underwriting, obviously, but
Yeah.
just general. I mean, those two work.
Uh, Self-storage, I would imagine, mobile home parks, they all, and just like any other asset class, probably different, market cycles than traditional multifamily. But have you seen the market cycle? Where are we in the cycle for those three asset classes? And then with the new administration coming in, like, how do you think that's going to affect things? I'm always interested in that,
Yeah.
that aspect of it.
That's a good question. So we're actually under contract to buy another park down in San Antonio, south of it, and we are bullish on that area because that's where all of the drilling is, and natural gas oil. So I
Yep.
mean, it's not the only reason that this park is a good park, but it is something that we're looking at. We're like, okay, maybe this administration, they like drilling, they want to,
Yep. They're like,
have
yeah.
America be kind of a leader in that area. It might be a
Right.
boon to invest in an RV park, because when people work in the fields, in the drilling fields, they usually stay in an RV park. That's why a lot of, like, especially in the bay, in Big Spring, Odessa, Midland, those areas, they have so
Yep.
many RV parks because of this reason. Um, and so, yeah, I mean, who knows what's going to happen with the new administration, but I do know that, like, that is something we're actively taking, we are pursuing right now. Um, we're looking at a park, we're buying it. We're underwriting it. We haven't decided yet, but because of that, well, not because of that, but that is one of the factors that play into our decision to buy it, is
Yep.
that there is going to be activity in the Texas basin there, and it is looking good.
Yeah, yeah. And he's a real estate guy, right?
Yeah, yeah.
So like I mean he's very pro real estate, probably pro business, very hands off, big business. And in Texas especially, like you probably get preferential treatment as a large real estate business
Well,
lender.
property taxes definitely kick you in the ass down there. I'll tell you
Yeah,
that.
that's true.
And
That's true.
electricity. It's like those are the two things that completely blew my mind about Texas. Electricity costs and property taxes are just through the
Mm,
roof. It's crazy how expensive they are. I don't know why
yeah.
they're so expensive, but like if I compare property taxes from Washington State and electricity from Washington State to Texas, it's night and day. I don't know why that's the
Jeez.
case. They need to get figure their stuff out down there.
Yeah. Well, Texas generates its own electricity, right? Their own
Yeah, they're
grid.
on
So
their
maybe
own
that's
grid.
why.
Why is that? Why do they have their own grid? I don't know.
How about insurance? Like
Uh,
insurance is a killer for a multifamily. I don't
yeah,
know how it is. Yeah.
it is. So I mean, that kind of follows the same path as banks. It is a little bit more difficult to insure self storage facilities, mobile home parks, RV parks.
Right.
But there are products out there, and it's generally not as expensive as you would expect from multifamily property, obviously, because they're a lot of times they're only insuring the land, or they're only insuring the utilities. There's
That's
nothing really
true.
on the property
That is
to be
true.
insured.
Right.
Uh, Self storage, especially in Texas, insurance can get really high because of uh, hail and tornadoes or hurricanes.
Yeah.
If you're looking in like I was looking in Oklahoma, there's this one deal I was under contract for in south of OKC. I can't remember the city name, but I it looked great, and I was super excited to buy it. It was like $2 million, but the NOI was, I can't remember what it was. It was a good deal, and I was really
Yeah.
excited. But then they
Yeah.
got their new insurance bill, their new insurance quote, and it was literally, I want to say it was like triple what it was
Holy
the year
moly.
before, because of they had just had this tornado that went through that area and just tore
Right.
things up. And so
Jeez.
yeah, insurance can, depending on where you're investing. I'm really speaking from the perspective of Texas and the southeast or the south. Um, but yeah, insurance, it can be high. RV parks, mobile home parks, it's definitely lower.
Okay. So we're pretty much at time. I don't know that there's one question that came in. Apologize if we asked this. Want to hear about the numbers behind one of the first RV mobile home park deals, purchase price, how you financed it, what the expected ROI was.
Yeah. Yeah, the first deal we bought, it was in a small little tiny city called George, Washington, in Washington State. Um, oh, man, I'm gonna you're gonna put me on the spot here for numbers. I think we bought it for, what did we buy it for? I want to say like 500. It was 27 sites at the time. And I think we bought it for like 500 or 550,000 or something like that.
Okay.
Um, and it was like 75% occupied, below market rents. But it had expansion potential, and it had a duplex on site that we could, fix up. Um, we I want to get actual numbers. Um, well, we added sites, so it was 27. We added up to 36 on the current pad, or the
Wow.
current location. But there's an additional 0.75 acres that we can expand into. We already went to the city council and had that meeting to get approval to expand into it. They put that on hold until they are worried about the water levels in the area, and so they don't want to add additional connections until they know that the water level is good. And so that will happen eventually. But even as it is right now, I think there's 36 and it's 100% occupied. Rents are originally 300 so in 2019 or 2020, essentially, when we bought it. And now I think they're at 500.
Wow.
Um,
Okay.
I don't remember what the NOI is. I think it's like 110,000, something like that.
Okay.
Um, I should bring up
Are,
my
are there,
P&L, but
are
it does
there,
well.
I was gonna say, are the net margins typically like 20% or 30%, 40?
Yeah, so the OpEx ratio that you use when you're just trying to do a rule of thumb, it varies between mobile home and RV. RV it can be upwards of 60%
Wow.
OpEx, but for mobile home parks, between like 35 and 45 is a safe margin. The second park we bought pretty close to that same park. It was on well. We bought that one for 600,000. It had 44 sites. 8 of them were mobile home. The rest were long-term stay RV. Same kind of situation. So this time the seller, actually both of those, they gave us seller financing. But the seller for this other one, he gave us like really low interest. It was like sub 3%. I can't remember exactly what it was, but it was
Oh,
pretty low.
wow. That's
Yeah,
great. Yeah.
but it was on well and septic. Two things I didn't really mention earlier, but those are things you got to watch out for, especially if you got trees on the property, because like they'll dig into the lines. You
Yep.
got lines going
Right.
everywhere because so many connections. But it was on well and septic, and so then the numbers look different. If you're on well and septic, obviously it's a lot cheaper because you're not paying for water and sewer connections, but you are paying for repairs if one of your septic fails, which it did happen at that park. But yeah, so I mean, 35 to 45% OpEx ratio is what you can kind of expect. It will really depend on the park, but yeah.
Got it. Okay. Well, we are at time, and thank you very much for the time you were able to give us, Gabe. And how can people reach you if they wanted to reach you to find out more information?
The Real Estate Investing Club is the podcast. The website is therealestateinvestingclub.com. Yeah, it's the best way to reach out.
Okay. Don't forget to like and subscribe to our podcast, Investing for Generational Wealth, on whichever platform you're interested in, and to make sure that we can continue bringing you the best educational content. Thank you, everyone. And until next time, keep learning to invest for generational wealth. Thanks, everyone.